This week, all eyes are definitely on the upcoming US tariff deadlines, creating a lot of buzz and uncertainty across global markets. But what many might be missing is a very important meeting that just happened yesterday on Saturday, the 5th of July. And the outcome of that meeting could actually have a more immediate impact on your portfolios than you think. I'm talking about the OPEC virtual meeting, where the 8 key members agreed to significantly increase crude oil output by 548,000 barrels per day for August. This is a faster pace than what we've seen in previous months, indicating a clear shift towards prioritizing market share. As we can see here, according to news agency Reuters, the move comes amid mounting pressure from global consumers and the United States, which has urged producers to increase supply to ease fuel prices. A statement from the OPEC Secretariat said that the decision to increase output in August was driven by the stable global economic outlook and healthy market fundamentals reflected in low oil inventory. So what does a ramp up in oil supply mean for us as traders? Well, generally, more supply, assuming demand holds, should lead to lower oil prices. And that historically can be a positive catalyst for the broader stock market as it reduces energy costs for businesses and consumers. So we're going to take a look at the oil chart a little bit later, but beyond oil, there are other crucial geopolitical dynamics unfolding that will undoubtedly shape market sentiment this week. And first, we have the looming July 9th deadline for potential new US global tariffs. President Trump has stated he's not planning to extend the 90-day pause, meaning letters are going out to nations. Now, shifting to geopolitical flashpoints, there's been significant news regarding Hezbollah. The US recently presented Lebanon with a roadmap demanding Hezbollah relinquish its weapons, with an expectation for Lebanon to respond by July 1st, which, yes, that's passed. However, some reports made July 7th for the deadline, if you will. So that is something we have to keep an eye on for tomorrow in particular. These tariff and geopolitical developments, alongside the OPEC decision, will be the major drivers for market sentiment heading into the new trading week. Now, speaking of market opportunities, if you're looking to navigate these dynamic markets and discover new ways to trade, you definitely want to check out Bitget. And right now, they're running an incredible campaign just for Trade Travel Chill audience, where you can get some fantastic rewards. There is 9 days left on this offer, and by signing up using the link in the description of this video and completing your first trade, you can get a welcome airdrop in trading bonuses, and if you make a deposit, there's even a rebate on your net deposit. Plus, they also have trading volume rewards that can go up to 1800 BGB, which is their native token. It's a great way to start your journey in crypto with some added capital. We've dropped the link to this campaign in the description of this video, so be sure to check that out and join it. Now that we know what's going on in the world, let's take a look at the charts and what all of this means for price action. The first thing I want to cover is the traditional stock market. So having a look at the S&P, we have now just created a new all-time high. From my last update, the area that we were consolidating in for quite some time was this red vector candle here. My warning to you was that we needed to get a clear breakdown of this consolidation range or a clear breakout before we could identify the trend continuation. So we got our clear breakout to the upside, and now what I would be waiting for on the S&P is some sort of a retest. I'm not expecting a full-blown reversal, of course, unless something crazy and unexpected happens, but after every breakout, it needs to get confirmed with a retest. So if the S&P comes back and retests its prior resistance and holds it as support, that's still going to be bullish for now for the S&P. The same thing happened with NASDAQ as well, creating a new high that also at this point in time needs to be retested. We have this vector candle right here, again consolidated in the range and then eventually picked the direction. So now we want to see if that direction gets proven again with a retest. So they're both looking rather bullish right now. And as I mentioned, oil is the one we need to watch as the market opens this week. We initially had our trap trader zone here. We returned to that level twice, and that's where we fell away. This was, all around the time of the war news, and we've basically been consolidating ever since. We're still currently under the 200 EMA, and we closed the week out with a bit of a rejection under there. So when the market opens this week, we definitely want to see if that actually continues to the downside. If it does, like I mentioned earlier, that will be positive for stocks which then in turn would also be positive for crypto. Now, when we have a look at the Dixie on the weekly time frame, this is at a critical level now because this is at a multi-decade channel. This channel began all the way back in around about July or say mid 2006, and this channel has held that entire time until now in 2025, and we are right at the bottom of that channel right now. So one thing that could happen this week is we have a little bit of a recovery, but that recovery might only be a retest, and then we have to see what happens next. If the trend holds on this and we continue to the downside, there's a good chance that we actually break this multi-decade channel. This is definitely one to watch this week. But the combination of all those things are generally positive for crypto. But we have to keep in mind that because that OPEC meeting happened on a Saturday, oil has not yet had the opportunity to react. So that's why we really need to keep an eye on oil when the market opens this week. In fact, our macroeconomist inside of the Trade Travel Chill Discord highlighted this exact OPEC event to our community well in advance. Now, he says here that it was Sunday 6. I think it depends on the time zone. I said Saturday. It depends on where you are. He's in the US, so it is later time zone than me. Don't get stuck on the minor details. The moral of the story is the meeting happened over the weekend, and therefore we need to see how oil reacts when the market opens this week. Now, this is just one example of the actionable insights that you get when you are part of our community. So if you're serious about taking your trading to the next level, understanding macro trends and getting ahead of the curve, then you absolutely need to be in the Trade Travel Chill community. We offer a comprehensive suite of resources designed to empower you as a trader. You'll get access to our premium Discord that I just showed you, where our expert analysts will share real-time insights, trade setups, and answer your questions directly. We provide in-depth market analysis, breaking down complex global events, actionable trading strategies. And for those who want to deepen their knowledge, we have an ever-growing library of educational content from beginner basics to advanced trading techniques. We're all about empowering you with the tools and knowledge to make informed decisions. And you don't have to take our word for it. We're so confident in the value that we provide and offer at Trade Travel Chill that you can enjoy a 48-hour money-back guarantee. And that means you can join, experience everything we have to offer, and if it's not for you within the first 2 days, you get your money back, no questions asked. So there's absolutely nothing to lose and a world of trading knowledge to gain. If you're interested, head over to tradetravelchill.club. The link is in the description of this video, and you can join our thriving community today. So with the traditional market looking fairly positive actually for Bitcoin, let's go and take a look at the Bitcoin chart. Now, we have a new weekly close coming up, so we're going to start right from the top all the way down. At this point in time, the current weekly candle is a doji, which is not fantastic. We don't really want to see a doji at the top of the trend. However, that could lead us to a potential pullback early this week. Before continued upside, we have to investigate a little bit further. But if we do have a little bit of a pullback in crypto, I would say that that's just lining up with the expected pullback that I was telling you about for S&P and NASDAQ, not necessarily warning bells, unless, of course, we have terrifying unexpected news. But at this point in time, the weekly time frame looks like it's going to close somewhere around coin's current high, or in the range of its current high, I should say. We still have this major liquidity zone between 110 to 114, and the one closest to price but below it is 92 to 97.5. Going down to the daily time frame, we can also see here that we are just consolidating essentially after the low that we had in early April, and we're building up liquidity either side. To me, this is all fine. This just looks like a macro time frame board meeting, as we call it over here on this channel, between levels. I would count this as a daily time frame rise 1. This is the consolidation that we expect between levels. So therefore, I would expect continued upside. It may not be immediately. We may retest support. We may retest the daily time frame 200 EMA and take out some of this liquidity. All of that is possible. But speaking long term, I don't think this is the end of the cycle. So therefore, I do think that there are eventually more rises to go. The smaller time frames will give us more of a hint of what's going to happen a bit shorter term. But longer term, I do think that this all still looks generally bullish. So now when we go to the 4-hour time frame, I'm going to zoom out so that I can show you exactly how I personally think that the levels are playing out that we trade. So if you're brand new here and you don't know what I'm talking about, we trade a very specific pattern that consists of things happening essentially in waves of 3. You might think that sounds like Elliott waves. It's absolutely nothing like Elliott waves once you get into the details of it, but I understand why at just hearing that you would think it. Now, these levels can play out on any time frame. They usually will play out on smaller time frames over the period of a week, but when we're in a pretty strong macro trend, it will feed up in time frames. So currently on the 4-hour time frame, my count for these levels looks basically like this. So once we hit that 75k region, we had our 3-level rise. This was an extension because it was based on some news at the time, which I forgot what it was. Extensions happen based on news. They don't happen often, but they can happen based on news. So I won't go into too much detail about that. The moral of the story is that there was the 3-level rise on the 4-hour time frame completed to me, and I was expecting a pullback. So now that should take us into 3 levels of drop. So the thing with levels is they can be stacked like this. So they increase the price if they're 3-level rises or decrease the price if they're 3-level drops. They can be sideways like this. So it's not about counting levels with price going in a direction. It's about volume, which is a little bit too much for me to get into on this video. Again, all the details are in our course if you want to learn to understand this strategy properly. But this would be counted to me as a sideways 3-level drop on the 4-hour time frame. So this through here is level 1 drop, and this through here is level 2, which means according to the 4-hour time frame, there may be a level 3 to come. Now, there are other caveats to that too, which is that when you're in a strong macro trend, you don't always get the 3rd level of the counter trend. Okay, so we're in a strong macro uptrend, meaning we don't always get 3-level drops because they're bearish, okay? So what that means then is that if you agree that the 4-hour is showing a level 3 should be coming next, you then need to go down even further in time frames to see if the lower time frames are showing you that that may be coming this week. So now we go down to the 1-hour time frame and we start counting the 1-hour time frame levels. So this was where our peak formation is, and that's where you start your levels. From the peak formation, this was early June, we definitely had our 3-level drops, which took us to this 98k region. And from there, we've had so far 1 rise and 2 rises. So now on the 1-hour, we may be expecting 1 more rise. So the 4-hour is showing potentially 1 more drop. The 1-hour is showing potentially 1 more rise. Now, that doesn't mean that both won't play out. It's possible that the level 1 gives us the rise and then we drop. When I have a look at the liquidity as well, the liquidity is very close. The highest amount of liquidity is very close to the current price to the upside. So it makes sense to me that we may go up, potentially into down. When you understand the timing, we also have the false move that starts the week, but that's more of a smaller time frame day trade. I'll get into that in a second. When we have a look at how last week played out, we can see that price right here tapped into a high level of liquidity before we had that reversal that started on Thursday as part of the midweek reversal. So that liquidity got taken out, and we now need to know where the new liquidity is and see if that's going to give us a hint of how the market might open this week. So therefore, we now need to go down to an even smaller time frame. So I'm now on the 15-minute time frame. And as you can see, we are definitely in the weekend trap. You can see what happened here where we spiked high on Thursday, got our midweek reversal, trended down on Friday, created the peak formation low, and then closed up into what has turned out to be consolidation all weekend. This is exactly how the market maker traps you on Friday into trades just to keep the trade open. So they don't hit your stop loss, they don't hit your take profit. They want you to open positions during sideways movements like this because they'll come and get you on Monday. And this is what we're trying to investigate now. So who are they coming to trap first? That's what we want to figure out. So we're going to go and have a look at a few things before we come back to the chart. So First of all, we're having a look at where the open liquidity is right now, closest to the current price. So this right here is the current price, and this whole chart is showing me the liquidity that's built up over the weekend. That's what I'm most interested in. And we can see that there's a very bright range here at about 107,250 below the current price. And then there's also a very bright range here at 109,180, which is just above the current price. So these two are going to be the ones that market makers come for first. When we have a look at the CVD, one thing that's concerning me currently is that the spot CVD is very, very flat. So that is telling me that the up move that we had during the week has not really brought in spot buyers that are continuing to buy over the weekend. So we want to see an uptrend supported by spot buyers, and we don't currently have that. And everything looks fairly flat there as well. Now, the interesting thing is the heat map. So these heat maps are showing us the current high level buy and sell orders for perpetual contracts. So where people with big money are looking to go long and short. What I'm noticing is these two levels right here that are just below the current weekend box, sitting at about 107,400 and 107,500. That is usually reminiscent of a false move week beginning that turns out to look like a stop hunt. So it'd be interesting to see if the price does break the range to the downside with a fast move eventually and then close back up within the range. If it does that, that would give me confidence that we are going up for a third rise level on the 1 hour time frame. So when you have a look at the chart, that's what this will look like. So these two dotted lines here are those two longs that I just showed you. So what would have to happen would be that price would come down, potentially look like a stop hunt into these orders. And then if it spiked out fast, you would then expect it's then going to come for the other side. On the other side, we've got shorts waiting at 109,500 and then also further up at 110,400, 110,700. So again, looking at that on the chart, that's where I've marked them here. And you can see that if we came there, we would just miss out on the major liquidity zone, but we would take out a lot of other liquidity. Let me show you. So all of these new lines that you're seeing on my chart, the liquidity that's built up over the weekend. So if we did spike down into those buy orders and then shifted out to complete our 1 hour 3-level rise, we would take out all of this liquidity potentially up into these short orders right here. That would be best case scenario. That's how I would like to see the week go before we actually do have any pullbacks. And that could still lead to the 4 hour time frame pullback. Now, just like that could happen, I have to give you the other scenario. And the reason why I have to give you the other scenario is because at the time of filming this, the price is just ranging here. When I assess the weekend, there's no trend, right? So it's very easy for a trader to tell you up or down when there's a trend and they're looking at higher highs and higher lows or the opposite. But right now, it's absolute sideways consolidation. So you can't really make a prediction other than trusting the counts of your technical analysis. So therefore, we have to be prepared for the other option. Before I tell you about the other option, I want to tell you why I still think this option, my original option, is the best case scenario for the market open this week. Because when you are assessing weekend price action and it is in just a box like this, what you want to look for is any spikes outside of the box. They give you the hint of who the market maker is trapping, especially if they happen towards the start of the weekend. So what I'm going to point out to you is this candle right here. So what this candle is telling you, in an attempt to break out a consolidation, or maybe they had people believe the trend was going to change after a strong move down, maybe they were getting buyers in, people who buy the dips to believe that we were going to just continue up. The very fact that that candle there is a fast candle, closed as a green vector, bought in volume, tells me that they purposely broke this high here to get people to FOMO into positions. So who would end up in a position there would be longs, because it would be people who have buy stops above resistance that have decided if the price breaks here, I want to get into a long position. So they would be in a long position. Who knows where their stop is now? Let's be generous and put it under here. And what that means is that the market maker has kept them trapped at around their entry the entire weekend. So it hasn't hit their stop loss. It hasn't hit their take profit. It's just hovering around the entry for the whole weekend. this is a perfect example of the weekend trap. So it induces traders, it keeps them stuck sideways, the market opens and stops them out. That, when you look at it, hopefully explains why I think the move might be down, because what it's done here is trapped long traders. So in order to liquidate them, they would have to spike down out of where long traders would likely have either their liquidation levels or their stop losses. Now, the false move that starts the week, it looks different all the time, and you have to learn that in detail. But one easy way is a stop hunt entry. The reason why I think there's a possibility of that happening this week is because of the open interest. So this is the open interest right here, and it's been dropping all weekend, and that or it's been sideways and dropping, but that means that the market maker has to induce positions before they can make their next big move. So they'll induce that by making a fast but fake move, just like this was a fast but fake move. That's what they will do. So best case scenario for me, because I can see the longs here, I can see the trap traders here, I can see the declining open interest, and I can see very low volume for the whole weekend. Best case scenario is we spike down. And look, it may not be into these long orders, because if you've never seen heat maps like that before, those orders can change at any time. So don't bank on these numbers. We're just looking for this action. Okay. So if the price spikes down and moves out fast, that's where I'm going to think, okay, we're probably going to go up first to open the week. And that's also an entry if you happen to be awake at the time that it happens. So therefore, that's my personal best case scenario. That's what I believe should happen based on what I'm seeing right now. What if I am incorrect and we go the other way? There is a possibility that we come up to test last week's high of the week, because there is a lot of liquidity around there. And that could also cause the false move week beginning. In addition to that, we've got this unrecovered red vector right here. So this whole range is a pretty good area of interest if they decide instead to issue the stop hunt to the upside. So if they were to do that, I would expect that they're coming to retest the high of the week and potentially take out these levels of liquidity right here. So that puts the highest point at about 108,600. And if that were to happen, then everything I explained to you about this fast move down then up would be exactly the same, but in the opposite direction. Okay, so this is my least likely scenario for the false move week beginning. But like I said, when price is 100% sideways, there is no trend. So you can't guess it. You have to just ask yourself, what do I need to see in order to make a decision? And so for me, what I would be looking for based on the open interest, based on the low volume, based on the sideways price action, and the one little fake out that we've had this weekend, I think the week should open with a stop hunt. And once you see that stop hunt, that is where you can take the entry, because the price should then move in the opposite direction of the stop hunt. Again, if you want to learn and understand all of this in full, consider joining us at TTC. And whilst you're down in the description of the video, check out the link for Bitget and let me know how you think the market's going to open this week.